The search for an affordable home in America often begins with a quiet calculation. A person looks at their income, studies the rising cost of housing across the country, and wonders if there is still a place where buying a house is realistic. Over the past decade, home prices in many major cities climbed far faster than wages. Coastal markets became symbols of extreme costs, and stories about million-dollar starter homes spread across headlines. But the United States is enormous, and housing markets do not move in the same direction everywhere. Away from the coastal boomtowns and technology centers, there are still cities where homes sell for prices that would seem impossible in places like San Francisco, New York, or Seattle. Many of the most affordable cities in America are located in the Midwest, a region shaped by more than a century of industrial growth and decline. During the early and mid-20th century, cities across this region expanded rapidly as factories, steel mills, and automotive plants attracted workers from across the country. Neighborhoods filled with modest single-family homes built for factory employees appeared almost overnight. These houses were designed to be practical and durable rather than luxurious. When industrial production slowed during the late 20th century, many of these cities stopped growing as quickly, but the homes remained. Detroit, Michigan stands as one of the clearest examples of this pattern. Once the center of the American automobile industry, Detroit was a place where factory wages supported entire neighborhoods of working families. Houses were built close to plants and along streetcar lines, creating dense blocks of small brick homes and bungalows. As manufacturing declined and residents moved to suburbs or other states, demand for housing weakened. Even after recent redevelopment efforts and new investment in certain districts, Detroit's housing market remains among the most affordable in the country. Buyers can still find houses priced far below the national median, especially in neighborhoods that have seen gradual rather than rapid revival. Cleveland, Ohio tells a similar story, though with its own local variations. Located along Lake Erie, Cleveland developed as a major industrial center during the 19th and early 20th centuries. Steel production, shipping, and manufacturing fueled the city's growth, and thousands of homes were constructed for workers and their families. As industry declined and the population stabilized, the housing supply remained large compared to demand. Today, many neighborhoods contain well-built houses from earlier eras that sell for prices far below what buyers would expect in larger coastal markets. Toledo, Ohio offers another example of how industrial history shaped housing affordability. Known for its glass manufacturing and automotive production, Toledo once supported a large workforce tied to regional factories. Residential neighborhoods expanded steadily through the early 20th century, filling with modest houses that reflected the practical needs of working families. When industrial employment declined, population growth slowed, and housing demand leveled off. The result is a market where home prices remain relatively low, especially compared with the national average. Further south, Memphis, Tennessee represents a different form of affordability. Memphis did not experience the same level of industrial collapse as some Midwestern cities, yet it still maintains one of the lowest median home prices among large American metropolitan areas. The city developed as a transportation and logistics hub along the Mississippi River, with rail lines and distribution centers supporting steady economic activity. Land around the metropolitan area remained widely available, allowing suburban development without the extreme competition for space seen in more crowded regions. Because supply expanded alongside demand, housing prices never reached the dramatic levels observed in coastal cities. St. Louis, Missouri, reflects another chapter of American housing history. Once a powerful river port and gateway for westward expansion, St. Louis built large numbers of homes during periods of industrial prosperity in the late 19th and early 20th centuries. Entire neighborhoods filled with brick houses and narrow residential streets, many of which still stand today. Although parts of the metropolitan area have modernized and expanded, many sections of the city maintain housing prices that remain well below the national average. These cities share certain characteristics that explain their affordability. Most have large stocks of older housing, moderate population growth, and economies that are stable but not rapidly expanding. Because demand for homes has remained steady rather than explosive, prices have increased slowly. Buyers entering these markets often discover that houses built decades earlier still provide a realistic path to homeownership. The presence of affordable housing in these cities also reflects a broader truth about the American housing market. While national headlines often focus on dramatic price increases, real estate conditions vary widely depending on local economic history, migration patterns, and land availability. A person searching for an affordable home may need to look beyond the fastest-growing cities and consider places where growth has been slower, but communities remain stable. In many ways, the cheapest cities to buy a house reveal a quieter side of the American housing story. These places rarely dominate national discussions, yet they continue to provide opportunities for people who want to own property without carrying overwhelming debt. Their streets are lined with houses built in earlier decades, reflecting a time when homeownership was considered a normal step in adult life rather than a distant financial challenge. Looking deeper into America's most affordable housing markets reveals that price alone does not define these cities. Each place developed under specific historical conditions that shaped how homes were built, where neighborhoods formed, and why housing costs remain relatively low today. Understanding those histories helps explain why these cities continue to attract buyers searching for affordability. One city often mentioned in discussions of low home prices is Pittsburgh, Pennsylvania. Once known primarily for steel production, Pittsburgh spent much of the 20th century as one of the most important industrial centers in the country. Steel mills along the rivers employed tens of thousands of workers, and neighborhoods expanded across the surrounding hillsides. Houses were built close to factories and transportation routes, forming dense communities with strong local identities. When the steel industry declined in the late 20th century, Pittsburgh faced economic uncertainty. Yet many of the homes constructed during its industrial peak remained. Unlike some industrial cities that experienced severe population loss, Pittsburgh gradually transitioned into a more diversified economy that includes healthcare, education, and technology. Major universities and medical centers became central employers, stabilizing the local economy. Because the housing supply built during earlier decades remained large, prices stayed relatively moderate even as the city reinvented itself. Today, Pittsburgh represents a rare combination of affordability and economic stability, making it attractive to first-time buyers and young professionals. Another city frequently listed among affordable housing markets is Buffalo, New York. Situated along the eastern edge of Lake Erie, Buffalo once thrived as a transportation hub connecting the Great Lakes with the Erie Canal. Grain shipments, steel production, and manufacturing fueled decades of growth during the late 19th and early 20th centuries. Residential neighborhoods expanded quickly, filled with sturdy houses designed to endure harsh winters and heavy industrial activity. As shipping patterns changed and manufacturing declined, Buffalo's population stabilized rather than expanding rapidly. Many of the homes built during the city's growth years remained occupied but did not experience dramatic price inflation. As a result, Buffalo today offers one of the lowest median home prices among cities in the northeastern United States. Buyers often discover that houses in historic neighborhoods can be purchased for prices that would be impossible in nearby metropolitan regions. In the southern United States, Birmingham, Alabama presents another example of long-standing affordability. Birmingham developed as a steel-producing city during the late 19th century, attracting workers from across the region. Residential areas spread outward from industrial zones, creating neighborhoods with modest houses designed for working families. Over time, the city's economy diversified into healthcare, finance, and education. While Birmingham never experienced the explosive housing demand seen in larger metropolitan areas, it maintained steady economic activity that kept communities intact. Kansas City, Missouri offers a slightly different perspective on affordability. Known for its railroads, agriculture trade, and later manufacturing industries, Kansas City grew steadily during the early 20th century. Wide residential streets and modest houses appeared across the metropolitan area, supported by transportation networks and regional commerce. In recent decades, the city has experienced renewed development in downtown districts, while still maintaining relatively low housing prices compared with national averages. This balance between growth and affordability makes Kansas City appealing to buyers seeking both economic opportunity and manageable housing costs. Further west, Oklahoma City illustrates how land availability can influence housing prices. Unlike older industrial cities with dense historic neighborhoods, Oklahoma City expanded outward across a wide area of relatively inexpensive land. Residential construction continued through multiple decades, creating large suburban communities where homes remained affordable due to abundant supply. Even as the city developed energy industries and regional commerce, housing costs remained moderate compared with national averages. What connects these cities is not simply their affordability, but the conditions that allowed housing supply to remain relatively high compared with demand. Many experienced periods of economic transition that slowed population growth while leaving large numbers of homes in place. Others expanded across wide areas where land was available for continued construction. In each case, the result was a housing market that avoided the severe shortages seen in rapidly growing metropolitan regions. For buyers searching for an affordable house, these cities often represent practical alternatives to more expensive markets. They provide neighborhoods with established infrastructure, schools, parks, and transportation networks built decades earlier. Although they may not offer the intense economic expansion of technology centers, they frequently deliver stability and manageable living costs. These characteristics illustrate an important reality about the American housing landscape. Affordability does not appear randomly. It emerges from the interaction between local history, economic development, and patterns of migration. Cities that once built large numbers of homes for industrial workers or expanded across wide suburban land often retain housing supplies that continue serving new generations of residents. While many of the cheapest housing markets appear in the Midwest and older industrial regions, affordable cities also exist in other parts of the country. In the southern United States especially, a combination of steady growth, lower construction costs, and abundant land has allowed several metropolitan areas to maintain relatively accessible housing prices even as their populations increase. Little Rock, Arkansas illustrates this pattern. As the capital city of Arkansas, Little Rock developed as a regional center for government, commerce, and transportation. Its growth occurred gradually rather than in sudden industrial booms, which allowed housing construction to keep pace with population increases. Suburban neighborhoods expanded outward over several decades, providing a large supply of modest single-family homes. Because land around the metropolitan area remained widely available, developers were able to build new housing without creating extreme competition for limited space. This balance helped maintain moderate home prices even as the city continued to grow. Tulsa, Oklahoma provides another example of southern affordability. Tulsa's early expansion was tied to the oil industry during the early 20th century, when energy exploration transformed the city into a regional economic center. Residential neighborhoods developed rapidly during those years, producing large numbers of houses that still form the backbone of Tulsa's housing stock today. Although the energy industry experienced cycles of growth and slowdown, the city maintained stable communities and a housing supply large enough to keep prices relatively manageable. Further east, Louisville, Kentucky combines historic neighborhoods with moderate housing costs. Located along the Ohio River, Louisville grew as a transportation and manufacturing center that supported a wide variety of industries. Residential districts expanded throughout the 20th century, producing neighborhoods filled with brick houses, bungalows, and modest suburban homes. Because population growth remained steady rather than explosive, housing prices increased gradually rather than dramatically. Buyers today often find that Louisville offers a balance between urban amenities and relatively affordable real estate. Indianapolis, Indiana represents another major city where housing prices remain comparatively moderate. As the capital of Indiana and a center for transportation and logistics, Indianapolis expanded steadily across a large metropolitan area. Wide suburban development and continued home construction created a large supply of houses. Although the city has attracted new businesses and population growth in recent decades, the size of its housing inventory has helped prevent the extreme price spikes seen in faster-growing metropolitan regions. The presence of affordable housing in these cities demonstrates how supply plays a central role in shaping housing markets. When communities are able to build new homes over long periods of time and expand across available land, prices tend to rise more slowly. Buyers benefit from the flexibility created by multiple housing options, whether older houses in established neighborhoods or newer homes in expanding suburbs. These cities also illustrate another important factor in housing affordability: economic balance. Instead of depending on a single rapidly growing industry that attracts large numbers of new residents at once, many affordable markets have more diversified economies. Government employment, healthcare systems, universities, transportation networks, and regional commerce all contribute to steady activity without overwhelming the housing supply. For people searching for the cheapest cities to buy a house in America, these markets offer a realistic path toward homeownership. The houses themselves often reflect decades of practical design, with modest sizes, durable materials, and layouts built for families who expected to live in them for many years. While they may lack the luxury features associated with modern high-end real estate, they provide stability and long-term value. Looking across these regions, one theme becomes clear: affordable housing markets rarely exist because of a single factor. Instead, they develop through a combination of history, geography, economic development, and long-term construction patterns. Cities that built large numbers of homes during earlier decades or expanded across abundant land continue to benefit from those decisions today. Examining the cheapest cities to buy a house in America ultimately reveals a broader picture of how the nation's housing landscape evolved. The United States experienced waves of development that created neighborhoods in different eras, each shaped by the economic forces of its time. When those forces changed, the homes themselves remained, forming the foundation of today's affordable housing markets. In older industrial cities, the story often begins during the early 20th century, when factories and railroads attracted thousands of workers. Developers responded by building rows of modest houses close to employment centers. These homes were not designed as luxury investments, but as practical living spaces for families who expected stable jobs and predictable incomes. When industries declined decades later, the houses continued standing, creating large inventories that still shape housing prices today. In southern and central regions of the country, affordability developed through a different process. Cities expanded outward across wide areas where land remained inexpensive. Instead of dense industrial neighborhoods, these places built large suburban communities with single-family homes spread across miles of residential streets. Because new construction continued over many years, housing supply kept pace with population growth. The result was a market where prices rose gradually rather than sharply. These patterns highlight the importance of time in shaping housing affordability. Homes built decades earlier continue to influence today's market conditions. A city that constructed thousands of houses during a period of rapid growth may still benefit from that housing supply generations later. Conversely, cities that limited development or experienced sudden population booms often face severe shortages and rising prices. For modern buyers searching for affordable housing, understanding these patterns can be more useful than focusing only on national statistics. A person looking for a reasonably priced home might find greater success by studying cities where supply remains high relative to demand. Often these are places where growth has been steady rather than explosive, where older homes still form the backbone of residential neighborhoods, and where local economies provide stability without attracting overwhelming migration. At the same time, affordability does not mean stagnation. Many of the cities discussed throughout this story continue to adapt to new economic realities. Universities expand, hospitals grow into major employment centers, and small technology firms appear in revitalized districts. These changes can slowly reshape neighborhoods while still maintaining housing prices below national averages. In cities such as Detroit, Pittsburgh, Buffalo, and St. Louis, redevelopment efforts have brought new life to historic districts once dominated by abandoned factories and warehouses. Old industrial buildings have been converted into apartments, offices, and community spaces. These transformations create opportunities for new residents while preserving the architectural character of earlier eras. Southern and central cities like Little Rock, Tulsa, and Indianapolis continue expanding suburban neighborhoods while strengthening downtown areas. Infrastructure improvements, transportation investments, and economic diversification attract businesses without immediately overwhelming housing supply. In these environments, buyers often discover that affordability and gradual growth can exist together. Ultimately, the search for the cheapest cities to buy a house in America reveals something important about the country itself. Housing markets are not uniform systems driven only by national trends. They are local environments shaped by decades of decisions about industry, land use, transportation, and community development. The homes people live in today are part of a long historical process that continues influencing prices and opportunities. For buyers willing to look beyond the most famous metropolitan areas, these cities offer a different vision of the American housing market. Streets lined with older houses, modest suburban neighborhoods, and stable communities still provide paths toward homeownership. Instead of the intense competition found in high-cost markets, these places often offer patience, negotiation, and realistic prices. The cheapest cities to buy a house in America, therefore, represent more than simple bargains. They are reminders of earlier periods when housing was built for long-term living rather than short-term speculation. They demonstrate how communities can endure economic change while continuing to provide homes for new generations. In a national market frequently defined by rising costs and limited supply, these cities show that affordability has not completely disappeared. It has simply moved to places where history left behind a different balance between homes and the people who need them.